So, welcome everyone for the next panel. My name is François Farjalla, and I'm a friend of the Davos Lodge. I'm here on a private capacity, and I'm honored today to be moderating a very interesting panel around a more interesting subject. We are living through a paradox today. There is more capital than ever and more sophisticated tools to deploy it. Yet, more uncertainty about how to deploy it with discipline. Today's session is about asking that we are witnessing a fundamental reallocation of a global capital, and what does it mean in practice? I'm joined with four esteemed panelists. Maybe I can start with Sébastien. Sébastien, who from Euroclear. What does Euroclear actually see when it comes to cross-border flows? What are the operation realities versus the vulnerabilities?
Thank you, François, and thank you for having me here today. Maybe just to talk about credentials before telling you what I see, but because not maybe everybody knows about Euroclear. So Euroclear is the largest financial market infrastructure in Europe. It holds today over 50% of all the assets that are issued by European issuers. And it is the largest financial market infrastructure also globally outside of the United States. And we are connected to 60 countries around the world. And we have 45 trillion euros of assets in our books. So 45,000 billions of assets in our books. We have as clients banks, central banks, sovereign wealth funds, broker-dealers, asset managers. So today we settle, so we see transactions going through our books that represents the world GDP every month. So every month the world GDP value goes through our books. So we believe that we have a pretty good view as to what is happening in terms of financial markets, financial flows across the world. Now, what we see are three different things. The first thing is infrastructure itself. You today have certain regions of the world that have a financial market infrastructure that allows them to safekeep assets, settle transactions, and settle flows globally. That's the case of Europe with Euroclear and another entity called Clearstream. But that is not the case in every region of the world. So some regions of the world today are looking at creating their own infrastructure so that they become less reliant and less dependent on other regions of the world. So if you are, let's say, an Indonesian investor and you are investing in Thailand, why would you go through Euroclear or Clearstream or another institution in another region of the world? So certain regions of the world are therefore trying to develop their own infrastructures for financial flows. And that is the case in Asia, that is the case in the Middle East, less so in Latin America today, but in the other two regions of the world, that's definitely happening. That's number one. So you can already sense that there is a willingness from certain regions of the world to be more independent than what they have been until now. So that's the first element. The second element is who those players use, all those investors around the world, who do they use to channel their investment flows globally? And there again, you start to see some significant changes coming from significant regions of the world. If I am today a Chinese investor and I am investing in the US, until very recently, I was basically investing directly in the US through a US bank that was basically going to safekeep all of my assets on my behalf in the US. The reality is that this is changing now. And I will give you one example. If you look at the investment in US Treasuries coming from outside of the US, and you look at what has happened over the last year, you will see that China has decreased its investment in the US, but Belgium, Luxembourg, France, and the UK have increased them. And you might wonder, why is that the case? Well, it is the case because Clearstream is established in Luxembourg, Euroclear is established in Belgium, and you have a lot of banks from France and the UK that are acting as global custodians. So what it means is that Chinese investors, instead of holding their assets directly in the US with US institutions, are actually today using other entities, other intermediaries to safekeep those assets on their behalf, so that we hold trillions of assets in the US on behalf of our clients, but effectively the US doesn't really know whether these assets come from one investor or another one or another one. They just see Euroclear as the investor on behalf of our clients. So that is what Chinese institutions are now doing, trying to, let's say, limit the understanding of their investments and to create confidentiality in relation to their investments. And the final thing that I would say is that when you look at the flows, you can see that there is clearly a willingness not to reduce the assets that those organizations have in the US today, but to be more diversified than what they were. So their new business and their new investments, the allocation of those investments is not the same as it used to be, and that they are investing less now in the US and more in other regions of the world. And I have some numbers and so on to explain more of that, but that is a clear evidence that comes from a lot of central banks and sovereign wealth funds in Asia and in the Middle East.
Thank you, Sébastien. I think maybe later on also we can move towards some statistics. Alex, if I may come back or come to you. We've spoken about the fiat currencies and what Sébastien is talking about. How do you see the digital assets and the cryptocurrencies playing a role in all this?
Well, thank you very much, Francois. Let me put it this way. As foreign counsel and you as an investor, you know this, it's very dear to us to help our customers finding the right ways to invest, especially if it's customers from outside, startups from outside, to find their way in Europe and to understand how governments work and how Europe works, because investing is also always a question of trust, and trust always has to do with knowledge, and that's what we're here for. And that's exactly the same question when it comes to digital cryptocurrencies or fiat. It's a question of trust. Now, of course, I don't have a glass bulb, so I'm not. I cannot tell you how things will evolve in the future. But looking at the way that cryptocurrencies have evolved over the years, and of course we still have the lead cryptos, Bitcoin and Ether, you know them, but many thousands of other ones, and we have many governments striving for digital cryptocurrencies. Even the digital euro has been discussed several times, but if we look at China, if we look at others, I'm not sure if the battle is won yet. So there is countries trying to, of course, prevent or at least limit or regulate crypto in a way that they still own the control, because of course crypto is a huge threat to all kinds of central banks. It kind of dismantles the power, the political power on currencies. And that is a big, big threat. So there's some countries trying to limit it, but we also have exactly the opposite as an example. Let me put out El Salvador being the first country saying, okay, we'll just accept the Bitcoin as a formal currency, even if we can't control it in any way. And as at the moment, I mean, we've seen the ambassador to Greece, the American ambassador to Greece just before. If we look at the strategy in America when it comes to cryptocurrencies, it's a bit of, at one point, they embrace it. They love it. They love the idea. At least Donald Trump does. We don't know about the central bank and others. And on the other hand, we have the same issue as anywhere else, regulating cryptos. Now, as you already stated out, money is on the market on a incredible sums are on the market. So the question is the trust still there in fiat? Do people still believe that printing money will safeguard their own assets? And probably not. And probably there is the idea of inflation all over. There's fear of inflation. So we see at the moment, if we look at hard assets, gold, silver, I mean, this is incredible how they exploded in the last months. This has always been. Now, what happens to crypto? And it's, I mean, we have, looking at the lead cryptos, they are at a very high level, yes, but we still see that there is doubts looking at the movements, and there's nothing, to be honest, behind them. So there's no assets behind them. It's a lot of speculation. Still, in the future, I believe it has a very bright future, because it will take time, but I'm quite sure that they will find their way in being a sustainable asset for people, in safeguarding their own wealth and making sure that they diversify within their own portfolio, and they will play a role. I'm personally quite convinced, but of course it's too early to say whether this will be the future of currencies, or if certainly for the next decade we will have a parallel of free currencies such as the cryptocurrencies and fiat money, which is still controlled by central banks and government entities. I think I'll leave it there. Otherwise,
thank you for this. I mean, one thing is for sure. Every time I speak with my kids, the cryptocurrency comes up. My kids are 24 and 19, and maybe we were raised when we were looking about the gold standard and looking about how the switch was from cash to credit cards, and for them they are looking switch from credit cards to crypto, and it's very normal.
Can I maybe just add a little something on what Alex said? For me, it's not one or the other. It can also be and, right? It can be cryptocurrency and fiat currencies and stable coins and CBDCs. There's no reason why one needs to remove the other one from the surface of the earth. You mentioned, that maybe crypto in San Salvador has been, accepted as a currency, but with which success? Okay, I think we need to be clear when we talk about those things and go all the way to the end. A success that is hugely limited at this point in time. And for countries to give up on their own currency also means they give up on their own monetary policy. So what does that mean for those countries? So I don't see a country with people having the right state of mind giving up completely on their fiat currency. It's acknowledging they don't have anything to say in relation to interest rates or anything related to the future and the financial future of their country. So I think it would be unreasonable for anyone to do it that way. That's why I say it can be and. It's a
question of trust. It's a question of trust. Look at Argentina and look at the inflation rate. So if people don't trust in their own fiat money, in their own currency, then they will strive for other options. And cryptocurrency, I believe, is one option. The minute fiat loses its trust, the people lose the trust in the fiat currency. As long as you have a stable currency and the state works appropriately on its financial course, absolutely, I agree. The minute we have issues in trusting a state-run currency, honestly, I believe people will rather go for other currencies, fiat money, dollar or whatever, or for crypto, rather than staying with their own currency.
Which I agree with, which is why today stable coins and others are having a reasonable success in developing economies where effectively they have challenges with their own monetary policies domestically, and Argentina is a very good example of that. So it is almost like the way for all the citizens of that country to keep the value of their assets, and the way they have found today is cryptos or stable coins, because that's the only way they have today to protect the value of the assets they have today, as opposed to keeping it in fiat currencies and losing 20% of it in a year's time. So that's why, so far as I'm concerned, so far I can see that there has been success. It's in those countries and for those reasons. But we cannot say that because it's successful in those countries under those circumstances, that will be the bread and butter business and currency, cash currency of the future for the whole world. That's where we need to find the right balance.
Thank you, thank you. Lazaros, if I may pick on your brain, can you tell us from the European Investment Fund investments point of view, when you talk about the EU and the VC growth capital, tell us a little bit about the scale-up financing and the EIF investments initiatives, if you can develop.
Thank you, Francois. Thank you, Davos Lodge. Thank you for your presence. Good afternoon to all. Where we stand well, because I think there's a lot of criticism of the European Union at large, but the European Union has many successes as well. And, I think, as the president of the European Investment Bank Group yesterday mentioned on the panel with Mark Rutte, we are a superpower on many fronts, and actually financial, no matter what the reiterated perspective is. And also the EIB group, I think itself is a success story, meaning we invest 100 billion yearly with borrowing in the market 60 billion and being profitable both the EIB and the EIF. So having said all this, still we need to act, we need to do more. Now, as far as venture capital, growth capital is concerned, we invest a lot, we crowd in a lot, crowding in private money, and we build the VC ecosystem. Of course, I refer to the European Investment Fund. A bit of background and some figures. The European Investment Fund is part of the European Investment Bank Group, 60% EIB, 30% the European Union by the European Commission, 10% financial institutions. When I say financial institutions, public, like BPI France, KfW, Cassa Deposit and Prestiti, and privates, for example, Banco Santander, Barclays, etc. So some figures for 2025, and a couple of initiatives for 2025. We have 15 billion invested overall, just for 2025. 8 billion guarantees, 7 billion equity. And, this is expected to leverage 64 billion and eventually to mobilize 130 billion. So, and this with very good profitability. I reiterate again, and I'm not saying it in opposition, but actually in finding ground for common action. If you look at the US or if you look at the UK, they don't have a similar model, successful, profitable, public institution model. So I come now also to a couple of initiatives because 2025, as Francois, was quite challenging from a fundraising perspective. At their EIF, with 15 billion, it played a relatively stabilizing role. And again, do not look only at the 15 billion, look at the catalytic impact of this 15 billion, leveraging 64 billion for venture capital in the European Union. Beyond the money, which the money is very important, we also initiated with BlackRock a new data platform. And again, you know very well, data is very important for the investment, long-term performance data. It is important for the performance, it is important for the market transparency. And we initiate the so-called tracked EU VC, which again with BlackRock. Now growth capital, if you wish I can elaborate now, I can give you a couple of triggers and then happy to, in the second phase to elaborate. As you say, I reiterate, we stand well and we stand ready to do more. And there, the challenges with scale-up financing. You hear it all over. You hear it also in Davos. You hear about competitiveness. On Tuesday, President Macron mentioned the Letta Draghi report that they set the tone. And Secretary Bessent also mentioned the Draghi report. And actually, the letter, the Draghi report, they do call for more venture capital money. They do call for more role for the European Investment Fund. They do call both reports for the European Union to benefit further for the EIF's capability to invest profitably. There, again, I'm happy to, if you wish to elaborate now or later, as you wish.
Please go ahead. I think we have still a couple of minutes of leeway.
Okay. There, I say what we have done already is the so-called, because let me say the narrative first for the scale up, and a bit link it, trying myself to be a bit more relevant with the panel with global companies. We try to make Europe, to contribute to European Union global champions, where we have, at least the theory goes, I'm not the theorist here, the theory goes, the narrative goes, that we have a problem with, closer to the, okay, we have a problem with growth capital. The European Union has great ideas, it does have great startups, but the theory goes that we have an issue with growth capital. And when we have an issue with growth capital, you risk that is great ideas, that is great entrepreneurs, where again, the European Union is a superpower because the education is still very strong in Europe. Also, if you see it at a relative cost, and I'm saying it myself, I did benefit from the great US universities. But if you look again, the correlation cost and quality of European education is good. So we have ideas, we have entrepreneurs, but you risk, if you don't have growth capital, that this all migrates outside the European Union. So we need growth capital, hence the scale up. At the scale up, we did launch under the French presidency the so-called European Tech Champions Initiative. This is, again, I focus on the numbers, is 3.9 billion. We have fundraised with 6 member states. 2.5 billion has been invested already. That was in the last 3 years. We have 35 investee companies. We have already 12, which was the idea, 12 mega investment funds that we have invested. Mega investment funds that they target 1 billion and upwards. And we have already 9 unicorns that they have come out of this. So not bad. And now, of course, we need to do more. And the time is happening again. You know, I see the criticism that, of course, we have to improve. But we pick the momentum. EIF, before the letter, the Draghi report was there, taking forward the European Tech Champions Initiative. And now we have, on Monday, it was published, the 5 report. The 5 report is authored by the ex-German Minister of Finance, Cookies, and the ex-governor of Banque de France, Christian Noyer. And there again, it talks about scale-up financing. It talks about the European Union levering on the capability of the EIB group to invest profitably, and it endorses the European Tech Champions Initiative. Again, advance in time, we had not been waiting for that. We had been structuring already the continuation of the European Tech Champions Initiative, European Tech Champions Initiative 2. This is, try to remember the numbers now, is 15 billion, the target to fundraise. At this time, to fundraise both from member states, but also from private players. And when we say private players, institutional investors, pension funds, insurance companies. The idea again is, not the idea, the target is to invest, leverage some 80 billion. So I stop here.
Thank you. And I'll come back to you maybe offline about these unicorns. I'm interested. Petros, what's in your opinion, or what's your opinion on how we would approach capital in these changing times after listening to the panel?
Thank you, Francois. It is indeed a very interesting question, and I will try to approach the core of the question of this panel. please allow me to thank the organization of Davos Lodge for this invitation. It is always a privilege and an honor to participate in a Davos conference. I would like to approach the issue from my academic perspective. My academic interest, my doctorate is in finance. So we are living in unprecedented times. Some would say turbulent, some would say challenging. So how can we say capital is still approaching the choices that will have to be made, but utilizing the old methods? And here I could, in one sentence, say that capital assessment is under strain in this period. I consider that even some could say that we are now undergoing a period of Knightian uncertainty, where the actual assessment of probabilities for capital assessment could not be certain. So, uncertainty and strain, this means to development, to change on our approaches. The first and key message that all of the players with regards to capital has to understand is that capital is not neutral. Now, capital is strategic, not neutral. What does that introduce into the discussion? The fact that we assess that now capital is strategic allows us to be able to assess the facets of the investments that we're doing in order for us to be able to attribute something very important in the investments that we're doing. And this is resilience. So I believe that in the shaping environment that we are, the next generations of capital assessment will be focusing not only on return on capital invested, but also on return on resilience of capital and adaptability of capital and the assessment of capital under different options and possibilities. Let me contemplate on that, utilizing also something that is critical in that moment, the AI intervention. We all know that one of the key factors that are shaping the future now of capital and of investments is AI. What key risk do we run from that? And this is a second level risk that is often understated. Having AI driving most of our decisions could lead to a specific rise on systemic risks, because the collinearity of the capital decisions could increase a lot this factor. And I will shift to the focus to the strategic elements of the capital investments. I would focus for a little bit in Greece, although we will have the opportunity to discuss the Greek situation later on in another panel. The investment horizon in Greece and how is it shaping? Which are the key sectors now that are driving the investments of Greece? We heard from the ambassadors of US in Greece, Mrs. Guilfoyle, from the Deputy Minister of Foreign Affairs, Mr. Theocharis, in the previous panel. Energy. Energy, a key strategic element, but also the element that attracts most of the investments. Logistics sectors, playing a significant role and investing on the significant geostrategic position of a country such as Greece, and many other that are considered of strategic importance and that attribute to the investment resilience. There are a lot of important facets. I will stop here. Thank you very much.
No, thank you. I think we will have enough time, 1 minute per person. If you have a magic wand, what would you do? Maybe we can start with Sébastien.
If I had a magic wand and the objective would be to ensure that capital markets and flows work well across the European Union, what I would do is create the right framework to ensure that the savings that today exists in Europe is actually invested as opposed to saved. And the reason why I say that is that today you have over 10 trillion euros sitting in banks' balance sheet, in savings accounts, and this money is actually not used for the future growth of Europe. So how can we incentivize savers in Europe to become investors in Europe?
That's the dream of Swiss private bankers as well. Who's next?
I'm not a Swiss private banker, but...
This is also a huge debate, especially in Germany, because this money, I come from Swabia, that's in the south of Germany. That's the region is well known, just like the Scottish, that we're supposed to be greedy and we put everything underneath our pillow rather than spending it and giving it out. But this is exactly, and I absolutely agree, Sebastian, I think this is one of the key challenges also for governments. If we want significant investment, and I'm also talking about using, for example, in Germany, the pension funds, because we use them very little. And unfortunately, we have a demographic issue, like most countries in Europe do. We need to tackle some challenges, such as the pensions in the future and many other social welfare questions. This money could be used very, very, very efficiently, but we have to allow it. So if I'd had a magic wand, I would certainly, how do you call that in English, enchanting our chancellor and the government in changing some of the regulation that we definitely have to change, and also on the European level, to exactly enable this money to be able to work and not only sit on a bank account and wait for somebody to pick it up and probably buy a nice handbag.
Perfect. Lazar.
Thank you, Francois. I don't like magics. I like to be pragmatic. And to be pragmatic, I think let us act. Let us not repeat problems. I think we debate a bit too much. We advocate too much, where the vehicles are there. The vehicles are there to implement, talking about the EIF, the investments, and we're doing it, and we have been being profitable. So let's be positive. Let's be positive within EU, you know, like beyond the EU. And let us act, let us be confident, just a bit of positive spirit. We have no time to waste in, you know, debating with our own selves, debating with the others. So let us be positive and let us act.
Thank you.
Thank you, Francois. Well, magic wands do not exist, but it is always interesting to hear, to listen and absorb thoughts on positive outcomes. With this respect, and without wanting to take this into the political part, I would really direct investments towards strategic sectors that attribute structural changes to the EU, to Greece, and with this respect, building resilience not only for the investment per se, but also for the economies in which they are implemented.
Perfect.
Thank you.
I think now we can open up for questions from the audience. Any questions for the panelists? I think everything was super clear. Thank you very much for your contribution. Really appreciate it.